Hello, welcome to Dialogue. I'm Pan Dong in Beijing. Chinese outbound merger and acquisition activities have boomed in recent years, and China has become the third largest foreign investor in the world for 5 consecutive years. So what challenges are Chinese investors facing now that China's economy has entered a stage of a new normal? How can Chinese companies avoid risks when going abroad? Are Brexit and the RMB's inclusion into the special drawing rights basket bringing China new opportunities? To discuss these issues and more, I'm joined in the studio by Charles Liu, founder of How Capital, and Rustam Temigaliev, Vice Chairman of Far East Development Corporation in Russia. But before we get started, let's take a look at this background report.
Chinese companies going global is now the new normal. But what's changing is that Chinese companies are no longer expanding overseas just to acquire natural resources and access advanced technologies. They're also bringing their own industrial expertise to more developed countries. Li Guolin, executive chairman of China Capel Chamber of Commerce, says companies are now using their own technologies to set up factories abroad.
Why are Chinese companies going abroad? For many big companies, they have dozens of factories overseas. They used to bring advanced technology from more developed countries into China. Now they are bringing our technology, which is much more developed, to other countries to improve the productivity there.
Chinese companies are now major investment sources for many countries. They not only explore the local resources, but also build manufacturing units and employ local talents. Many countries have come up with incentives to attract more Chinese companies.
It's very important for us to focus on Chinese investors because they account for approximately 2/3 of all foreign investment into the Russian Far East. That's why we are here, actually, meeting with our existing clients and meeting with other companies.
We think it's a very good platform to promote Belgium as an investment destination. Chinese companies investing in Belgium, we have already over 100. We have a level playing field. Let's say Chinese companies enter the Belgian market, get the same rules, the same advantages as companies get or companies from other countries get.
So let's get the discussion started. Gentlemen, as we just mentioned, China has been the world's third largest foreign investor for 5 consecutive years. What do you think is driving this surge, Mr. Temigaliev?
China shows economic growth approximately last 20 years. So I think the main reason of the high level of Chinese investments in foreign markets, I think it's a big level of savings into the China. That's why I think in the next few years China will have equilibrium of economic growth approximately 5% per year and about foreign overseas investor approximately 7% per year.
If you take a look back 5 years, the past 5 years, do you see a pattern of China's foreign investment?
I think it's more than a question of 5 years. I think the best way to look at it would be about 8 years. The 4 trillion RMB stimulus program has led to a thirst and hunger for resources, led global resource prices to go up substantially. But I think the changes in the Chinese investments is, number one, the change is today a lot more private investment. It used to be major SOEs. Number two, it's now diversified from very large projects down to very small projects. So a whole range of investments are
What do you mean by small projects?
Small investments. We were looking at projects, let's say 6 or 7 years ago, that's 2 billion and up in US dollar terms.
Right.
Today, there are $50 million deals and $70 million deals. Some of the technology companies that I've invested in can be $10 million deals. So, and whole gambit, a whole range of possibilities are now available and are being pursued actively.
So, Mr. Temigaliev, have you viewed this change of pattern firsthand by yourself? Because we know that Russia is trying very hard to attract investment into its Far East region.
Yes, yesterday we had a very good meeting between our Vice Prime Minister, Mr. Trutnev, and Chinese Vice Prime Minister, Mr. Wang Yan. So we have discussed many projects, mostly in Far East of Russia, mainly on the One Belt, One Road project. Directly we speak about new sea, deep water seaport near Russian city Vladivostok with Chinese China Merchants Group and many other projects.
Do you think that's a reflection of China's new economic stage, as earlier you mentioned?
I think that is one aspect. The development of infrastructure in the Russian Far East throughout Siberia is good for everybody. It's not just a question of infrastructure. Anywhere, if you want economic development, you have to have infrastructure. Without roads, without ports, without railroads, high-speed railway, you can't do anything. And power, electricity. But even more important, Siberia, very large area, huge resources, very few people. And I think there are ways in which the resources can be tapped. What my friend here is describing is really the state-to-state or government-to-government type of projects that is being entertained and will probably be executed very quickly. But what is even more important are the private side. I think many Chinese investors have already been active. I'm involved in a gas field, an oil field in Siberia, energy, and other natural resources, wood, timber.
Right.
These are things which meshes very well with China's need and thirst and Russia's ability to supply. But I would add something here. As an investor, someone on the ground, we look at three risks. One is local political risk, two is geopolitical risk, and third is investment risk. Because since last year, what I've seen is black swan events, especially in terms of geopolitical risk. Who would have thought there would be a Brexit? Who would have thought there would be Donald Trump as the Republican candidate? Even 6 or 7 months ago, it would have seemed inconceivable. So these risks are increasingly important. But in this context, I think the relationship between President Xi and Mr. Putin are very good, which hopefully would carry through to the lower levels.
So, Mr. Liu just raised two very important questions. First, how do you protect investment in your own country, foreign investment? And second is, how do you provide a stable and secure environment for the investment to boom?
Yes, no, I think our presidents, President Putin and President Xi Jinping, met last year 4 times. So I think we have a very good political relations. We are geopolitical partners between Russia and China. What about Chinese investors? We have a good growth from China of investments, approximately 10% per year from China. Yes, I think it's a very good indicator of our relations. So we have a good governmental instruments for support Chinese investors.
What about legislation and law enforcement?
Yes, we have a new law in Far East. We have, if Chinese investors decide to invest in Russian Far East, our governmental have some instruments. First, we may finance this project in 10 or 20% of volume of this project. Second, we have a new law which protect Chinese investors. So yesterday we decide about making a new Russian-Chinese center for supporting of Chinese investors in Far East. I think it's a very good idea and we're working about it.
It's a good idea.
So do you think, Mr. Liu, do you think this kind of cooperation or this kind of pattern is commonly seen in China's foreign investment?
No.
Why?
No. In terms of in other countries, we don't see that very much in other countries. This happens because two things. Number one, President Xi and President Putin have an understanding of each other's needs. And second, the strategy of the two countries also mesh. In Russia's case, Euro-Asia economic integration. In China's case, One Belt, One Road. is all the same. Now, of course, you add Mongolia in there because Mongolia is sitting in the middle.
And Kazakhstan.
And well, if you go through Kazakhstan, you have to go through mountains. If you go through Mongolia, it's flat plains. So it's much easier to go through Mongolia. And Mongolia has friendly relations with China, but on the other hand, it's much closer to Russia and has been for a long, long time. So these are type of strategic issues which binds the two countries' fundamental interests together. Now, you cannot say that about other countries. I think in Russia's case, it's very, very clear. There's a lot of potential. It would do very, very well. But in terms of the other countries in Europe, for example, situations are very different. You have the additional layer of Brussels, the EU. So it's no longer just a bilateral relationship or strategic alignment, but you also have the bureaucrats of Brussels who decides certain other regulations.
Right, since you mentioned Europe and the EU and Brussels, let's talk about Brexit. We know that UK is the biggest recipient of China's foreign direct investment. Do you think that Brexit will change this good momentum into a reverse?
I don't think so. I don't think Brexit had happened, and it will happen. Whether or not it's hard Brexit or hard exit or soft exit, that's for the politicians to decide. Most of the decisions to invest in Britain were private, non-political, commercial, economic decisions. It did not tie into Europe. For example, transshipment of Chinese products from Britain to the continent of Europe is less than 5% of total trade. So it's really insignificant. And the development of China's relationship with Britain is far beyond that of what Brussels can dictate. And I think in terms of Europe, China has, for example, you know about 16+1, right? 16 Central and Eastern European countries plus China are talking about massive layers of cooperation and collaboration. I think what we have is a situation, increasingly, you cannot talk about China and the EU. China and France on nuclear power plant in the UK, China and Germany on machinery building, on robots, robotics and technology transfer. It will be bilateral collaboration, and these collaborations are going quite well.
So talking about risk management, well, Russia is now facing some kind of sanctions from the Western powers. Fair or not, it's up for argument. But recently, the RT's account it's reported that RT's account has been frozen in the UK. So how Russia usually deals with this kind of risks?
Yeah, a few words about Brexit. I think Brexit is a very good opportunities for Chinese business and for Chinese economy, because I think after Brexit, Chinese RMB will be the second currency in the world after US dollars, because euro have many risks after Brexit. About risk on Russian economy, and I think Chinese investors in Russia, I think we have, first of all, Chinese has a very big reputation in the world. I think it's the main. Second, Chinese business and Chinese have a good educated management risk. So I think it's not very big risks for Chinese investment in Russia.
Thank you very much, gentlemen, for your input. You're watching Dialogue on CCTV News. We'll be right back after this.
It will reduce unnecessary hurdle and frictions between the international countries. It will increase global trade volume, especially free trade, import-export. I think that will benefit all the participants. We feel like for Chinese enterprise to go out to the world, I think there are many opportunities. There's a huge market for us to develop, especially over the internet. However, there is challenges I would personally see as legal and local customs and consumer habits are our challenges, but I'm sure those are much easier to conquer compared to the market.
Right now, the production capacities of China has been growing and growing. So now this excess capacity is being moved to countries like Zambia in Africa. So we are now benefiting from the growth of the Chinese economy.
We can bring more efficient investment closer to the market, closer to the resources with this industrial capacity cooperation. I think this is going to launch or relaunch economy all over the world.
Welcome back. So let's pick up from where we left, Mr. Temigaliev. You were talking about Russia's dealing with Western sanctions earlier.
Yeah, I think on Russia, we think about West sanctions is a good opportunities, good possibilities for Russian economy, because we have very huge structural problems in Russian economy. Mostly it's energy policy of our country. Main branch of our economy is energy. Mostly it's raw materials like oil and gas. So we need big investments in infrastructure now. We need a more liberalized economy. We need to help from government to small business. So I think we have a good opportunity in this case, in case of West sanctions.
So talking about risks, as we just mentioned, it's reported that RT's bank account has been frozen in the UK. So when you invest abroad, how do you control situations like this? Because obviously it's politics related.
Yes, we understand all geopolitics risks now for our economy, but we have a good savings in the Russian economy, because last 10 years was a very high level of oil prices. So we have a big governmental savings. So we have new opportunities, not new possibilities in our economy, mostly with Chinese partners. I think One Belt, One Road will be the main project between Russia and China, and the biggest invest projects. I think St. Petersburg, Moscow, Novosibirsk, Urumqi, and Beijing, Tianjin will be the major city of this big project, with seaports, with high-speed railway stations and other big projects in our country.
There's one thing just to add to that in terms of the seaport. Vladivostok is a fantastic port, but it's been a military port. It hasn't been sufficiently commercialized. Now, if you look at the border, if you look at the map, things from Heilongjiang province, if it goes through Vladivostok, can be shipped to the southern part of China at half the time and 40% cheaper than by land.
Yeah.
There are all kinds of possible integration in terms of transport, logistics, that's possible. In terms of the other thing that you described.
But the big question is Russia willing to commercialize this strategic port?
Yes, we commercial. Yes, we last year we have had the new law, free Vladivostok port. It's really very good items for investors. So
the governor of Heilongjiang province has visited already, looking at possibilities.
Yes. Yesterday we have met with Governor Mr. Luhao, I think his name. Yes, Tsilin province and Heilongjiang province have a seaport, Dalan, and yes, it's approximately 400 kilometers from by railway to this port. But Vladivostok is only 200 kilometers. So more cheaply to make ITC, international transport corridors between China and Russia in Vladivostok area, between Heilongjiang, Tsilin and Vladivostok. So Chinese grain from these provinces will coming from Vladivostok like transit, and going from Vladivostok to the south of China,
duty free
to Shenzhen, to Shenzhen, to Gongkong and other provinces of China. I think it's more cheaply. So yesterday we have a good agreement between China and Russia about ITC project, international transport corridors between Heilongjiang province and Vladivostok area of Russia.
Well, this is a very interesting case, isn't it? Because your own product going through a foreign port and it costs less than domestic transportation.
Absolutely. You, being Chinese, fully aware how expensive it is to ship inland.
Yeah, especially on highways.
On highways, you're charged a lot of toll.
Right.
But more than that, in terms of grain, in terms of corn, in terms of a lot of products, there is losage. You lose a lot on land transport. On ocean transport, it's so much faster. It's much more efficient. I remember doing projects in Jilin province. You know, Jilin produces, I think, 12 or 13% of all of China's corn, but it can't get it out because it's just too expensive to ship by land.
And transportation is exactly a highlight of cooperation between China and Russia. As Vice Premier Liu Yandong put it, the China-Russia high-speed railway is also on the map, isn't it?
Yes, it's a few projects. So I invite your fund to invest in this ITC international transport corridor.
Look at it.
Yes, it will be a good investor. Yes, it's a high-speed railway. It's a new roads. It's a new deep water seaport. We would like to. About industrial park, we're thinking between Russian and China entrepreneurs, and we think about new small city near Vladivostok, which will be a new project between Russia and China.
So Chinese standards will apply to the construction of this
Yes, I think financing of this project will be from Chinese banks. China Exim Bank is very interested in this project. China Merchants Group, very big company, would like to build a new deep water seaport near Vladivostok, and many Chinese companies wants to invest in these projects. So I think after 2 or 3 years, we to make this project.
So, Mr. Liu, how can China actually benefit or profit from these huge overseas infrastructure projects?
I think there are several ways that one can talk about profiting. There are three layers. One is strategic, one is more how both sides structure the deal, and the third is the investment return. On the strategic side, to have one belt, one road, one thing happens. China's economy and those of its neighbors become integrated, which produces stability and political friendship, which is very, very important, and increases the level of communication and the level of interchange or mutual fertilization among the countries involved, which is very important.
But it will be a profitable project.
Second, in terms of profitability, there is long-term money. Because these infrastructure projects are long-term projects. Long-term money because, for example, the insurance companies in China, the major development banks, policy banks, are long-term money. And as long as they get a fixed rate of return, they're happy. And this will be profitable. Thirdly, in terms of the companies involved, very specific, Chinese companies have built a lot of infrastructure. 中建.
Right.
All these companies have the capacity, which is partly overcapacitized now, that they can actively be engaged in these projects, keep up employment, keep up their profitability, and so there's several tiers, and it's all positive.
Well, earlier you mentioned some black swan events, but we know that there are constant political and economic barriers. Earlier you were saying that Chinese businesses are doing very well in the United Kingdom. This reminds me of the case of Huawei. It's a very successful company in the UK, but back in the United States, it's facing huge challenges and even banned in some industries.
Continues to be banned.
Yes.
I think United States is a different story. If they can pick Hillary Clinton and Donald Trump as their candidates for president, that says something about the U.S. system. Something's wrong. Something is seriously wrong. And not only that, the US economy is not doing very well. And they play a lot of politics, especially against the rising strength of China. Now, Huawei has not only done well in the UK, all over Europe, it's done very, very well. So I think when I say Chinese businesses have been aggressively going abroad and have done well, I would leave the US out of that. I would also have some issues with countries like maybe Japan and also partially Australia, because Australia has been aggressively following the US lead in the containment of China politically. So if they're deciding to do that politically, it certainly will have economic impact. But European countries, no growth, slow growth, negative growth, and they have a very antiquated infrastructure. They really need a lot of help. And those with some strategic vision, especially the leadership level, are happy to entertain it. Now, whether or not Theresa May falls into that category, I don't know, because the Hinkley Point project almost ran into trouble when she took over as Prime Minister. But it's not difficult to foresee, because her visit to Hangzhou, I was told, in the G20 2 months ago, was her first ever visit to China. So when you have a Prime Minister who's never been to China, that may take some time or adjustment to get used to. But in terms of Germany, in terms of Italy, in terms of France, in terms of the Central and Eastern European countries, the relationships are going well, and they welcome Chinese investment on a bilateral basis.
So, Mr. Tomigaliev, what would you say are some risks of China's Belt and Road Initiative in its implementation, and what are your suggestions from your perspective?
I think the main countries where Chinese investors will develop and will invest, I think mostly firstly it's the developing nations, because Europe, United States, or North America is not a very good area on these days have a big profitable projects. So I think it's a Central Asia countries like Kazakhstan, like Uzbekistan, Turkmenia is very good. I think Pakistan, yes, they grow approximately 8-10% per year. It's a good level. So I think Russian Far East, good area for Chinese investment. Some projects in Africa and Latin America, yes, but it's not will be a branch like raw materials. I think Chinese investors will invest in the high-level IT projects and maybe in infrastructure projects, long-term infrastructure projects. About international transport corridors, McKinsey in Moscow, Beijing offices, working about profit, they think about profitable 11-12% per year IRR in this project. So I think it's a good area for Chinese investors.
Thank you very much, gentlemen, for your input. And that's it for this edition of Dialogue on CCTV News. I'm Pan Zheng in Beijing. Bye-bye.